Today is Friday, October 9th, end of the week. We've had a great trading week. We've had a good trading day, and we're going to go through the process of updating our performance from yesterday when we did not do an end-of-day review and today into our personal trading plan. This is all based on our performance of trading the NASDAQ 100 futures off of a 5-minute chart using the adaptive entry system, which primarily consists of the 4 entry signals that are very easy for any trader to identify. Green shaded highlights are signals to go long, red shaded highlights are signals to go short. So we're happy to teach you how to use the adaptive entry system if that's something that you think would fit well into your trading toolkit. I wouldn't want to be without it at this point, and kudos to New Cycle Trading and Analytics for the work that they did to create this for all of us. So we're going to jump over to our tracking. This is the tracking tool that Erin did such a great job of creating for us. And you're with me today, Erin, right?
Yes, I am.
So we start at 7 o'clock in the morning to really track for the purposes of our personal trading plan. And we record every single trade entry, whether it's short or long, what strategy is being presented to us on the adaptive entry system, and then what our profit was or our loss was. We also keep track of the drawdown just to kind of get an idea of what the major drawdowns are, and we'll use that data at some point, sort that data at some point to kind of extrapolate what a reasonable stop is. But for now, we use a 20-point protective stop for all of our trading on NQ. So once we look at the detail, then we jump over to the summary, and we can see yesterday. Of course, we didn't do the review yesterday. In the 2 categories that we translate into our personal trading plan, one is 9:30 to noon and one is 7 to 4. The 9:30 to noon is taking all of the adaptive entry system signals, and the 7 to 4 is just taking the trend related signals, which is the trend bias signal and then the continuation signal. So yesterday, I was away for a good portion of the day yesterday, and Erin and Michael were leading the charge in our live trading room. We had a 28.5 point loss on the morning 9:30 to noon signals, and we had a 1 point loss on the 7 to 4 trend bias and trend continuation. Those point values, you multiply them by $20 because NASDAQ 100 futures has a $20 per point value for every contract. So Erin, any thoughts you want to share about what was going on yesterday with market movement?
It moved. There,
A little bit. Oh.
just a little bit. It was very, very interesting. I was in. We were in a trade, even with adjusting stops and reducing risk, for about a half an hour, which is quite unusual with what we normally see. And then we had a span of about 2 hours, over 2 hours, where we didn't have a single valid adaptive entry system signal, which again is very unusual. And then we ended up ending our day with 3 back-to-back trend bias signals without anything in between, which again is another very unusual type of market activity with the day that we were seeing.
Erin had shared that with me yesterday afternoon, and this morning when I was taking a look at overnight trading activity, there were some gaps. There were some gap periods also that showed some similar activity to yesterday. So here's the thing: we want what the market wants. It's an expression that we've learned from one of our mentors, one of the gurus of trading that we all follow. And we want what the market wants. And yesterday the market wanted to be a little sluggish. Today it wanted to be a little sluggish. In the last half hour or so, the market, as defined by the NASDAQ 100, has been a little flat, a little sluggish. And one of the things that I noticed also is you can see that yesterday we only had a 64% win rate on the trades. We generally average higher than that. We have some other days where we've been, in the low range, tend to be our losing days. Today we had a 60% win rate. Sorry, yesterday and today we had a 60% win rate on our trend and trend bias trades. Now, that doesn't always mean that you won't be successful for the day. Yesterday we lost 28.5 points. Today we made 23.25 points. Yesterday in the trend bias and continuation signal category, we lost 1 point, and today we made 16.75 points. Those obviously are lower numbers than our average. You can see that the average through the time frame that we've been recording the detail in this tracking tool is just under 31 points a day. So an average is an average, meaning you're going to have point production that is higher than that some days and point production that is lower than that some days. And even in our optimum category, where we've identified trading from 7 to 4 all signals is producing kind of the optimum outcome in point production. Yesterday we made 1 tick. Lost 1 tick. So basically we were flat for the entire day, having taken 27 trades. Today we actually had a lower win rate, 63%, but we earned 38.5 points. So the numbers are what they are. We don't react to what our performance is any day. What we do is next we pull up our personal trading plan. And Aaron, I'm wondering if you could help me out here as I enter these into the trading plan, if you would just give me the numbers so I don't have to flip back and forth.
Sure.
So what I'm going to do, I'm going to start with the 7 to 4 trend, bias, and continuation, because I have a couple of comments about the other category that I want to share when we get to that. So we pull up our personal trading plan. This is our tool which helps us forecast what our income could be over the course of a 12-month period. And it's all based on what our averages are. What are our run rate averages? What have we established as an average, blended average between all of our wins and all of our losses? And then we're going to project forward the balance of our 52 weeks using those same values. So what was our point production yesterday in the trend bias category?
Down a point.
So minus 1 point. Okay, so minus 1 times $20 a point, and we're scaled up to 3 contracts. So yesterday was minus $60. I have this where it needs to think sometimes when I first enter the value, but only the first one. How many trades did we do?
15.
So we did 15 trades at 3 contracts per trade, so 45 contracts. And then today, what was our point value?
16.75.
So 16.75 times $20 a point is $335 of profit times 3 contracts, $1,005 of profit today. And how many contracts?
15.
Again.
Same. Yes.
Yeah, okay. So 45 total contracts. That was 15 trades for 45 total contracts. So I'll explain this a little more thoroughly on the next category that we track, but just in summary here, I now know that we have completed 14 weeks since we started tracking. We have had 16 losing days in 14 weeks. So we know what that relationship is between number of weeks versus number of losing days. I have an average winning day value of 33.19, which takes into account this relationship between losing days and number of weeks. I have a losing day average of 25.71, which again takes into account the values here of 16 losing days per 14 weeks. And the reason we have that calculation taking into account the frequency of losses is because the original plan, the original 52-week plan, is based on assuming a loss 1 day out of every 5 trading days. So if our experience rate is losing slightly greater than that rate, we need to take that into account. So these calculations actually factor in the rate of occurrence as well as the actual values, the average values of our winning and losing days. And that way, although the plan shows a losing day 1 day a week, we're going to base our go forward forecast on these values, which take into account that frequency. So our winning day frequency, our winning day average is 33.19, and our losing day average is minus 25.71. So by interpreting those numbers and knowing what our run rates are, we can plug them in here, and these numbers are the ones that are driving our future forecast. So we've got 14 weeks under our belt out of a 52-week plan. We have 38 weeks now that, based on today's entries, are being forecasted based on 33.19 and 25.71. If we trade no more than 3 contracts at any time during this, the remaining portion of our 52-week period, then our potential income over the course of 12 months is $325,000. So I'll lock those at 3. If you wanted to adjust the number of contracts, you can do that. The number of contracts will always be limited first by being no more than 10% of the balance of the account. So the second limitation is something that you can choose based on your own interest, your own security, your own confidence level. If I decided to increase my max contracts to 5 contracts going forward, then I can see what that would do, how that would change, modify my overall 12-month income. It won't change anything in the 14 weeks that have already transpired, but it can change going forward. So I think that 3 contracts is a reasonable maximum, considering that it's also metered by being no more than 10% of the balance of the account. And we started with $5,000 in this category. And so that's a very, very reasonable income forecast, I think, for anybody. So on the other category, which is our 9:30 to noon, this is designed, we're tracking this to help show and profile what can be accomplished in a shorter time frame. So instead of trading from 7 to 4, you could trade from 9:30 to noon. All sorts of ways you can trade, time frames you can trade, and we can show you what those values might be. But we're attacking this 9:30 to noon category, and we're going to track it for a 52-week period. So Aaron, what was our point production yesterday?
Down 28.5 points.
So 28.5 times 20 times 3 contracts would be minus 1710. And how many?
14 trades.
Trades. So 14 trades times 3 contracts is 42 contracts. And how about today?
Positive 23.25.
23.25 times 20 is 465 times 3 contracts is $1,395. And number of trades?
10.
So 30
I was
contracts.
like, you don't need a calculator for that one.
3 contracts. Well, I was going to call Michael and see if I could borrow his calculator. Okay, so I want to spend just a couple of minutes really reinforcing something here. This particular category has a much higher frequency of losing days than the other category that we just showed. It just is the nature of, if I'm going to limit my trading to 9:30 to noon, I have less opportunity prior to that and after that time frame to overcome any losses that I might have had during that time frame. So you've got to kind of look at them separately and say, if this is the time period that I have available to trade, is this time frame trading all signals helping me to produce an income that I would consider to be satisfactory to myself? And so in this case, we have 25 losing days in 14 weeks. Now you can decide whether you think that that's good or bad. I don't really have an opinion about that. It just is what it is. It is what the market has offered us. It's what the adaptive entry system has offered us. I'm more interested in these numbers right here. My average run rate for winning days is 22.32 points. My average run rate for losing days is minus 38.35 points. And those averages take into account the frequency rate of losing days to the number of weeks that we have behind us. So now I can take these averages and use them to forecast out for the remaining 38 weeks that we have in our 52-week trading plan. So I'm going to translate those numbers here. 22.32, that's incorrect, 22.32, and then minus 38.35. Okay, so there's a lot of different ways that traders interpret what's going on. And when traders don't invest the small amount of time necessary to track some detail and to track some information and to track run rates, they tend to be far more emotional about their reactions. They actually are reacting to whatever their outcome is as opposed to just responding to it. And there's a very different emotional energy that's associated with reacting versus responding. So I could react and say, "Oh my God, I originally thought I was only going to have one losing day every week, and I've got an extra 11 losing days. I can't do this." I mean, there's all sorts of conclusions that that's a trader will jump to because they don't have enough information. I believe that with the personal trading plan, it allows you to level out a lot of those emotions and all those ranges and just not emotionally look at this objectively and go, okay, based on what I'm doing, not what I planned on doing, but what I'm actually doing, does this allow me to achieve a goal that I had for myself? So in this case, at the rate of 25 losing days per every 14 weeks, that's been the outcome in this category so far. It may get better or it may get worse than that. I don't know. I'm not predicting that right now. But if I take the current run rates and I forecast the rest of the 38 weeks of our 52-week plan, it tells me that based on starting with a $5,000 account and capping out at 3 contracts max, that I can potentially make $150,000 over the course of 12 months. So now it's up to each of you individually as a trading business owner to say, that works for me, or it doesn't work for me. But no longer does it matter, really, what your frequency rate of losing days is, because you've factored that in to your averages. And if it doesn't matter, and these are your averages, if this is what you continue to do for the next 38 weeks, roughly around this range, then you have the potential of about $150,000 income over the course of 12 months. I think that that's pretty strong. Now, it's possible that your run rates will slightly erode. It's possible that your run rates will slightly improve. If you went through 2 or 3 weeks with no losing days, we had that earlier in the 14 weeks that we've been tracking. All of a sudden, those numbers change. That's why we strongly emphasize that after trading, which is the most important thing for you to focus on during your trading time, the second most important thing that you can do is to plug your data into your personal trading plan and look at where that is projecting you out for a 12-month period. A lot of people will tell me that the traders are just interested in what they make or lose today. And I think that that drives an incredible amount of emotion. And a lot of traders will abandon their trading after 2 or 3 losing days because they just can't do this. They throw in the towel, but they've never bothered to take the time to look at it in the perspective of, how am I doing overall on my averages? And if I continued at this particular run rate, will it allow me to achieve something positive? And right now, I can't guarantee that this is going to happen for you if you're following right along in lockstep with us. But right now, our projection for a 12-month period is to go from $5,000 to $150,000. I think any way you slice it, that's a pretty darn good outcome. Even though the other category, which takes more time committed to trading each day, could potentially give you over 300,000. So this is a combination of choosing the signals that you want to trade as well as choosing the time frame that you want to trade. One last thing I'll just share with you here. We've shared this many times before, but Aaron built some incredible automation into our detailed tracking tool here. And for those of you who have a limited amount of time to trade, well, we are profiling 9:30 to noon. We are profiling 7 to 4, mostly just to help you understand how the personal trading plan works, how you use it, how you should view it. That doesn't mean that you necessarily fall into one of those 2 categories and that there are no other time frames that are going to be of value to you. So here's just absolutely one of the coolest things that Aaron built into this. You can change, we can change in this tool. This tool is not yet available for our clients, but we can help you here in the live trading room, or you let us know what time frame you'd like to evaluate. We can help you with that. Particularly in our every other week Q&As, we're happy to do this. But say, for example, I decided I wanted to trade all signals, including fractals. So it's all signals on the adaptive entry system plus fractals. And I know that I only have from 10 a.m., these are Eastern times, to 12 o'clock. The numbers shouldn't drive your decision, meaning the 9:30 to noon, you have to kind of force yourself into that time frame. No, this is all about, if you want to trade and you've got limited amount of time to trade, you decide what time frame you want to trade. If you came to us and said, listen, I'm available from 10 to noon Eastern time, I'd like to see what that could possibly produce for me. And we can tell you, it's all based on our historical tracking, detailed tracking. This is not a look back evaluation. This is literally evaluating each trade throughout the day, putting it into our spreadsheet, and then being able to go back and gather all of that data to be able to project for you what time frame you might want to trade and what the outcome could be. So if you were someone that wanted to trade 10 to noon every day, just 2 hours, the average over our 84-day tracking period since we rolled out this tool is 390 points a day. So 400 points a day is $8,000 a month. So it's just under $8,000 a month of income, which is $96,000 a year. So you're probably around $90,000 a year potential income from those 2 hours a day. One last example, we have people that say, listen, I've got time early. I'd like to trade from 7:30 to market open. I don't want to be present at market open. I've got other things to do, or market open frightens me a little bit because of how volatile it can be. You trade from 7 to 9:25 and you never participate in market open, or 7:30 to 9:25. So again, about a 2-hour period. There's a $408 average. Now, averages include losing days, so you have to be ready to accept that you're going to have losing days. And of course, they include far more winning days than losing days. During the 84-day tracking period, we have 18 losing days. So we can tell you exactly what to expect. Numbers aren't always going to be exactly these going forward, but it gives you a basis to kind of understand reasonably what you could expect. And if your numbers are reasonably close to these, then you find yourself being right in line with what we're doing. So the absolute best category is all signals, including fractals, and that is from 7 to 4. That's averaging about $1,600 a day, and this is all based on one contract, and there's only been 8 losing days in that category out of 84 days. The overall win-loss ratio is 73.8% on individual trades. So we're pretty excited about the collection of tools that we've put together here, specifically with a thought in mind of supporting people who have a desire to trade and helping them view their trading less as just an activity and more as a personal business that they are creating for themselves and for their families. So that's all I've got today. Aaron, did you have anything you wanted to add? Any other thoughts?
No, but I was very happy today had a little bit more price movement than what we saw yesterday.
Yeah, I agree. It gets a little monotonous when there's not price movement. And if Erin was an individual trader, she might have just walked away yesterday and go, okay, it's not worth watching. But she's trading her account in the context of helping all of you in the live trading room learn. And so we're here until close to the end of the market day, and we're tracking all the signals. We're still building our database, and the more data we have in here, the more integrity the averages have, and it just helps us help you decide what you could possibly accomplish in whatever time frame that you choose to trade. So, Aaron, thanks for building this. By the way, it's awesome.
Absolutely.
And thank you all of you for being here. Really appreciate you being part of our group. Um, hold on just a second here.